Hello everyone, my name is Ruzanna. Today my groupmates and I will be discussing the IPO of Square Inc. Let's get started. Square was founded in February 2009 by Jack Dorsey and Jim McElvey. It was born out of experience. Jack Dorsey was inspired by Square after his friend Jim McElvey could not accept credit card payments for his art. They created Square Reader, first product used to accept credit card payments by simply connecting it to a mobile device. Square started with Card Reader, enabling anyone with mobile device to accept card payments anywhere and anytime. Then its product list was expanded to offering products and services for sellers to start, run, and grow their businesses. From POS and payment services, they gather unique insights, enabling them to extend into financial and marketing services. Square users are businesses from diverse set of industries, including retail, food, and leisure. They serve sellers ranging from a single vendor to multinational businesses. Square headquarters are located in San Francisco, California. Company also expanded globally. Besides United States, it has offices in Canada, Japan, Australia, United Kingdom, and Ireland. Reasons for IPO. The main reason for IPO was to obtain additional capital, facilitate access to public equity market, and create public market for Class A common stock. Square intends to trade its shares on New York Stock Exchange under the symbol SQ. Company completed its IPO on November 19 of 2015. Use of proceeds. Square plans to use the net proceeds for working capital in short-term, investment-grade, interest-bearing securities such as money market accounts, certificates of deposit, commercial paper, or guaranteed obligations of the U.S. government. Company also is intended to use some of the proceeds for acquisitions of complementary businesses and other assets. Major contents of Form S-1. Risk factors. Company expects that rate of revenue growth may decline since sellers don't have obligations to continue using their services. Also, they don't have a long-term contracts with sellers. In addition to, there is an intense competition in the industry. Legal matters. Square is currently involved in lawsuit concerning independent contractors in connection with caviar businesses. They may have various other litigations from the ordinary course of business, but company doesn't believe that any of the matters will have an adverse effect on the results of its business operations. Square's revenue has grown rapidly. Net revenue in 2012 and 2013 increased by 172% and 54% respectively. However, company generated net losses. Despite net losses, Square continues to make investments that will serve sellers and buyers over long term. Another major aspect is executive compensation. Square's executive officers consist of CEO Jack Dorsey and two most highly compensated officers, Sarah Fryer, CFO, and Alicia Henry, sellers lead. Table here sets forth the information of total compensation earned by or paid by Square executives for the year of 2014. Voting power. Another major content of Form S-1 is voting power, which is determined based on the ownership of Class A and B common stock. Class A and B common stock are entitled to 1 and 10 votes respectively. In the table we can see that Jack Dorsey and all executive officers have the major ownership of have the main ownership of the stocks, therefore they have the main voting power for the company. Thank you very much. Now I'll be passing over to my team member, George.
Thanks, Ruzanna. Hi everyone, I'm George Gukasyan, and today we will be discussing a couple of the highlights of the S1. The key issue prevalent throughout the financial statements was, surprisingly enough, Starbucks. Therefore, throughout this section, we will analyze the impact of Starbucks in conjunction with other matters of mentionable note. Let's dive right in. In order to do so, we will be taking a look at the Consolidated Statement of Operations data, also known as the income statement. Throughout its time as a client of Square Inc., Starbucks was the only client to account for more than 10% of total revenue. In fact, it accounted for 17 to 19% of total revenue. However, beginning October 1st of 2015, Starbucks began transitioning to a new processor provider. As a result, Square Inc. took it upon itself to present any Starbucks-related data as separate line items for investor convenience. This was done in order for investors to be able to more easily analyze the impact of Starbucks moving on and make more sound business decision judgments. Highlighted in red above is this Starbucks-related data. As you can see, Starbucks transaction costs actually outweigh the transaction revenue and have since the very inception. This is interesting, provided that Square Inc. has always been in a net loss position. This alludes to a problem with Square Inc.'s business model. Another matter of mentionable note is that the production costs of the magnetic strip readers are actually included in sales and marketing expenses, which is highlighted in blue, and that Square provides its employees with share-based compensation in the form of restricted stock options that are located in product development, sales and marketing, and general and administrative expenses, highlighted in orange for your convenience. Furthermore, in compliance with Rule 14C-3 of the Securities and Exchange Act of 1933, Square Inc. has provided 3 years of audited income statements, as seen above, 3 years of audited cash flow statements in their S1 in conjunction with 2 of the most recent balance sheets. Now let's take a look at another courtesy measure for investors. As previously stated, Square Inc. has gone above and beyond for the potential investor. Not only do they provide separate line items for key data, but they have also calculated adjusted earnings before interest, taxes, depreciation, and amortization, which is a non-GAAP financial measure meant to represent their net loss adjusted to eliminate the impact of Starbucks-related transaction costs, revenues, share-based compensation, and things of such nature. Taking a look at the chart provided above by Square Inc., we can see that they have restated almost 4 years of data. And for example, the Starbucks-related transaction revenue and costs, which are highlighted in red, we can see that the revenue is deducted from net loss, whereas the transaction costs are added back to net loss. This is done to eliminate the impact of Starbucks. In doing so, we can see that earnings actually improve. This is not surprising, provided that Starbucks has always resulted in a net loss for Square Inc. This provides the investor with an opportunity to see how Square Inc. would have performed without Starbucks. Going one step further, Square Inc. also provides a quarterly breakdown of the same data in order to provide investors with the opportunity to get a quarterly breakdown and understanding. Let's take a look at highlights of the MD&A, Management Discussion and Analysis. If you recall, we alluded that there is an issue with Square Inc.'s business model. This is so provided that Starbucks, its largest client, actually resulted in a net loss for the company. In analyzing the MD&A, this issue becomes apparent rather fast. The magnetic strip readers were actually distributed for free. And if you recall, their production costs were included in sales and marketing expense. This is problematic, provided that the percentage that Square Inc. gets to keep with every swipe of the card is now having to be spread even thinner in that it has to cover the manufacturing cost of these devices. In its MD&A, Square Inc. explicitly addresses the significant issue by stating that the new magnetic chip readers, which are NFC chip compliant, would now be sold at a price that covers its manufacturing costs. This will better the financial outlook of the company and lead to better success. Other issues of mentionable note in the MD&A are that warrants held by Starbucks, which made them eligible for common stock after the IPO, were cancelled, and that their Series D preferred stock was sold to a third party. This effectively severed all ties with Square Inc. Now, let's take a look at another significant issue and highlight in the MD&A. Trends driving the economy forward and favoring Square Inc. and its product line. Taking a look at the charts provided by Square Inc., we can see that local businesses generate almost 54% of private sector output. Likewise, of the 30 million businesses in the United States, 21 million of them still do not accept electronic form of payments. Breaking this down even further, we can see that 30% of purchases in the US are still made on paper. This is mind-boggling, provided that by 2023, we're expected to have over 10 trillion in credit card payment type sales. As a result, Square Inc. is uniquely poised to facilitate this transition and be the technological disruptor. Smaller businesses will now have the opportunity to accept electronic forms of payment at an affordable cost. Lastly, let's take a look at the IPO and the common stock issuance itself. Prior to the IPO, Square Inc. provided select shareholders with convertible preferred stock ranging from Series A to Series E. This convertible preferred stock is not tradable on any public exchange, but rather provided these select shareholders with an opportunity to own a piece of the company. However, after the IPO, this preferred stock was converted on a one-to-one basis to Class B common stock. The 665 select shareholders will now own a 99.1% of the combined voting power in the company. Each of their shares would entitle them to 10 votes, and these shares will be convertible on a one-to-one basis to Class A common stock. Class A common stock is what was actually made available to the public investors, and it entitles the holder to 1 vote per share. It is non-convertible, and you guessed it, it provides the public investors with a whopping 0.9% of the combined voting power in the company. As you can see, as a result of the IPO, Square Inc. is not so much a public company, but rather a private company that provides an opportunity for public investors to own a small sliver of the company. This is done intentionally so that control of the company is maintained within the existing corporate framework. Thank you very much, and now I'm going to pass it along to my partner, Tina.
Thank you, George. Hi, my name is Tina, and I will present the IPO process for Square Inc. As we know, it's very extensive and expensive process, but before doing any filing, Square Inc. had to hire a law firm to represent them, and also an independent registered public accounting firm, in this case KPMG, and also get into a contract with underwriters, and here you can see the list of underwriters that are contracted with them. After going through this process, then in August 2015, they start filing the documentation for registration. The first documentation filed was a draft registration statement, and following that will be the draft registration statement letter, which was filed in September 2015. And finally, in October 2015, they filed their S1 form, the initial filing, which is for first-time IPO filers. And besides filing the S1 form, it doesn't finalize here. Securities Exchange Commission needs to review all the forms and all the discrepancies or the disclosure issues and send them a letter, after which the company responds with the amendment form S1A to the Securities Exchange Commission, clarifying all the issues or the disclosures and explanations. And then in November 2015, they do their free riding prospectus. And finally, in November 16, they get approved for certificate of New York Stock Exchange. Right after that, finally they are getting SEC's approval effective notice, which was in November 2015 again. And in order to finalize, they had to file a couple more forms, which is S8 for securities to be offered to the employees deferred plan, and CT order, confidentiality treatment order, and the final prospectus, which is Form 424B4. And now let's take a look of a couple of examples that shows the Securities Exchange Committee response comment letter to the company and the company's response to the questions on letter. And one of them is addressing, on this one here, for example, is addressing issues regarding their accrued expenses, evaluation of allowance, collectability of the receivables, and then in response to the letter, as you can see, they explain that accrued transactions, losses, settlements, and receivables are separate and distinct accounts and are not directly related to one another. And another issue that was pointed in the SEC's letter is about the employee stock purchase plan that is not in their index exhibit. And then company responded that it has been updated in their exhibit. And these amendments go back and forth between the company and Securities Exchange Commission until everything is clarified and brought up to Securities Exchange Commission acceptance level. Now also it's interesting to see their red hearing prospectus, which is filed with their first S1 form. That one, as you can see, is missing the numerical data regarding the number of shares or the pricing or the percentage of distribution of their common stock. But in a second time amendment filing, they have already a prospectus representing all the numbers as far as, let's say, common stock prices, which is between $11 and $13, or how many shares are they going to sell. In this case, even though it's not final yet, that will be finalized in the final prospectus. And now Aaron will represent accounting issues.
Thanks, Tina. I'm Aaron. I'll be talking about accounting issues, disclosure issues, and risks. Square is growing fast. Part of this is into foreign countries. They have various tax systems. Taken together, they are complex. President Trump has promised to reduce corporate taxes, but many of his issues have floundered. It's hard to say what the future is for taxes with Square. George talked about adjusted EBITDA. Sometimes adjusted EBITDA is required, but in Square's case, it's optional. The SEC expressed concern that only Starbucks was reflected in the adjusted EBITDA. Square responded that Starbucks was by far their largest customer. On to Square's Corporate Social Responsibility, or CSR, program. Jack Dorsey is the lead executive of both Square and Twitter. He promised to give 20% of Square's stock to a foundation he started, the Start Small Foundation. It helps struggling communities. Square has never had a profit. Because of this, they can't afford the extensive CSR program that larger companies such as Starbucks have. I'm going to talk a little about Starbucks' CSR program. A large part of it helps the environment. They are working to provide more fresh water to the world. They're working to help the farm workers and growers have more sustainable lifestyles. They're working to make coffee the world's first sustainable product. Their social responsibility programs include full tuition for benefits-eligible employees for Arizona State University. Starbucks is able to do this because they have strong profits and cash flow. Now on to disclosure issues. Many of the disclosures made in the S1 are boilerplate. The S1 states Our business depends on a strong and trusted brand, and this in turn depends on continuing to be a technology leader. Square does have many competitors. Square's technology is advanced in both the hardware and software it provides to customers. Their technology includes patents, but also trade secrets. With trade secrets, it's hard to say whether Square will continue to be ahead of their competitors. When you apply innovation to technology and processes, you get growth, a strong brand, but also risk. Another risk of Square is the possibility of no profits. Its revenue has increased 8-fold from 2012 to 2016. Its losses have also increased. That's moving in the wrong direction. Square needs to turn a profit. But I believe the increased expenses and losses are probably due to investments for early operations. Another disclosure is conflict of interest. JP Morgan Securities LLC was an underwriter with the IPO. It and its affiliates owned 10% of outstanding convertible preferred stock. This is a conflict of interest. To address it, Square followed Rule 5121 of FINRA in the IPO. Morgan Stanley and Company was a qualified independent underwriter of the IPO. Thank you. Now on to Mia.
Thank you, Aaron. In terms of audit considerations, Square filed its first S1 in October 2015. As a result, it needed audited financials for 2012, 2013, and 2014. These showed that the major assets were cash and cash equivalents at nearly half, followed by settlements receivable and property and equipment net. The liabilities consisted of customers payable at nearly half, which is a current liability. Stockholders' equity consisted of convertible preferred stock and a large amount of accumulated deficit. These audited financials were performed by KPMG. Prior to the audit, certain tests had to be conducted. The large inventory of hardware of credit card readers needed to be subject to physical inventory, and there needed to be adequate documentation for the large amount of digital cash transactions. Square's revenue increased nearly by 4 times between 2012 and 2014, and as a result, its internal controls needed to be adequately tested, as this would prevent a risk of a material misstatement. The accuracy of the customers and their balances is also highly important, as this is how Square generates the majority of its money. Therefore, they needed to be sampled and verified significantly. While the audit was in process, the credit card reader inventory was verified. Transaction revenue from digital cash transactions were traced and vouched to test occurrence and existence. The other business assets were tested for valuation and existence. The customer's payable liability had its accounts verified to ensure that they were not understated. In stockholders' equity, the convertible stock was verified and the accumulated deficit was tested for completeness. To test the adequacy of the internal controls, the custody, recording, authorization, and reconciliation duties had to be ensured that they were separate to prevent the risk of material misstatement. The SEC responded to Square's S1 with a comment on October 29, 2015. One of their concerns was there was a stock-based derivative in which the value of the stock was guaranteed by Square at time of sale to be $37 million. The SEC also questioned how they had categorized this as a temporary equity, and so they requested the value of the liability from the derivative as well as how it was considered a temporary equity. Square responded 8 days later on November 6, 2015, with the value of the liability at $1.5 million, and that because it is a stock-based derivative on the condition up until the IPO and the lockup period that it is considered temporary equity. This shows that Square has revised its S1 to meet the SEC requirements. By filing the amended S1 within 8 days, it's fulfilling its goal of having a quick IPO, which will raise additional capital. As a result of this amended S1, Square's S1 became effective on November 18, 2015. And now I'm going to pass it on to George.
Now time for the capstone. Let's take a look at the stock movement and evaluate the IPO itself. Square Inc. went public on November 19, 2015 at a price of $9 per share. It closed later that day at $12.04 per share. This strong performance is indicative of one, that the IPO was priced correctly, given that they were initially considering an IPO price between $11 to $13, and two, that the major issue prevalent throughout the S1 regarding Starbucks moving on had no major impact on the IPO. However, things took a turn, and in January of 2016, the share price dipped below the IPO price to $8.77. This is a credit to nothing more than shareholder speculation that the CEO, Jack Dorsey, who is also the CEO of Twitter, would not be able to manage two giant public companies. This speculation has all but vanished, and the stock price is more than rebounded. The current 52-week high is $29 per share, and the current closing price is $28.81 per share. Taking all this into account, we can see that Square Inc. more than accurately predicted the economic trends in its MD&A and has met its ambitious goals. This IPO was a success. It has generated much sought-after capital and more than tripled shareholder wealth. Thank you for your time, and we hope you found this presentation enlightening.